Hi, HeroX challengers. This is David Linton with Bigelow again with video number 2. You'll recall that in our first video we talked about the private transaction market where roughly 11,400 companies in the US alone changed ownership last year in 2017. So a very robust market. Now we're going to talk about who the investors are in this market. And really there are 4 different kinds of investors, and if you look at your slide, we've outlined who they represent. They're very different in terms of their capital sources, where their capital comes from, the nature of their organizations, and their motivations for wanting to invest in these private companies. And remember that in each case, when they buy a company, they're buying a unique data set, right? I mean, to speak as a data scientist, every single company has different attributes and characteristics. So those 11,400 companies all represented unique data sets. So these 4 different investors are what we call strategic investors. So think about those as operating companies we all hear about, whether that's Apple or General Electric. These are companies that are operating in different markets, providing products and services, and they want to grow through acquisition. So they're an acquirer or investor in private companies. Another very robust kind of investor is what's referred to as private equity investors. These are funds, F-U-N-D-S, that are raised by general partners to basically use other people's capital to invest in operating businesses, where they buy a certain company, help it grow, and then sell the business for a capital gain for their investors. It's a very robust market. There's over 4,000 private equity firms in the US alone. And last year, at the end of 2017, there was over $600 billion of capital raised by these private equity firms to invest in private companies. Then there's a hybrid. We call them private equity platform investors. These are a mix between operating company and private equity. So they're actual operating companies who have private equity owners. So these are private equity companies have invested in these businesses, and then they want to grow those businesses through acquisition. So those would be quasi-strategic and private equity, right? A mix between the two. And then the fourth is an emerging kind of investor called the single family office. This is a result of the wealth that's been created in this world, in this country specifically, for the last 20 years as entrepreneurs have had very successful exits of their businesses, creating a lot of liquidity, and then those individual entrepreneurs go back into investing in operating companies and private companies. So they become investors themselves, and they set up family offices to use as the tool, the mechanism for investing in operating companies. So that's a fourth kind. And like I said earlier, they're all different. You can see that the capital sources are different. In the strategic case, you might have a public company like Apple again, who raises capital through the public markets, but there's many strategic buyers that are private companies. And then the private equity firms are raising limited partnership capital from high net worth individuals and pension funds. And the single family offices are private capital of these successful entrepreneurs. Now, as we think about this market, and we think about the kinds of clients we're representing, we only represent companies that have as a minimum $50 million of value, what we call enterprise value, to the business. In many cases, it's more than that, but that's kind of a minimum level. So as we look at the universe of prospective investors, we know that investors have to have roughly $250 million of available capital or access to available capital to make a $50 million investment. And the way that shakes down is basically they're going to use 25 million of their own capital equity, and then they're going to raise another 25 million of debt to finance the $50 million enterprise value of the business they're acquiring. And they don't want to put all their eggs in one basket, so roughly they only invest about 10% of their total equity available in any one company. So as you think about the challenge we're talking about, we're really talking about a universe of investors that have 250 million or more access to capital, okay? The challenge, obviously, is how do we find these investors, and how do we find them worldwide, because the world is now flat and there are investors of this ilk all around the world, and we're trying to gain access to find out what their interests are and match them up with our unique data set, unique kind of client business. And we'll talk more in the next video about how we go about doing that.